Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. So why is this earnings season probably one of the most important in a long time? Well, that's the question in front of our panelists today. Editor-at-Large Steve Reitmeister, Senior Market Analyst Charles Rotblut, and of course top market technician Kevin Matris, all with us here once again at the round table. So that is a good question because we're coming up to, the beginning, or we're already in the beginning of another earnings season here. An earnings season that has had before it, just a big, huge, deep recession precede it. Why is this probably one of the more critical ones?
Right. Earnings season is always important, but if we roll back 3 months ago to the last earnings season, that was like, are we going bankrupt or not? That was the key variable. If a company said that we're not going bankrupt, their stock rallied, and that's where it kind of had a bottom. So now it's a little more like, okay, are we just still dragging along bottom, or is there actual improvement? Okay, and that's what this earnings season is about. So in other words, the second quarter earnings numbers are not supposed to be like growth numbers. It's supposed to be like, hey, it's not getting worse, and what are you seeing in the early business for July and so on? Is it getting better? And what are you going to do as far as your estimates going forward? And that is a great test because the market has come up a great deal and it needs confirmation. In other words, do we have reason to believe that business has stabilized? Do we have reason to believe that business is getting better? And this earnings season hopefully should give people that information. And hopefully it's good and we can move higher.
But some people out on the street actually feel that this is one of the more important ones, maybe the most important in 10 years.
Well, I think that's a little bit of an exaggeration. There's always someone trying to go for the headlines. But basically, I'm just going to say what he said.
So you agree it's a critical...
No, I think I agree with Stephen. And Stephen and I didn't talk about this beforehand, but our answers are going to sound exactly similar. And I did actually talk about this on Friday.
So don't write in. Why did they sound similar?
No, but I talked about this on Friday in earnings preview. What people want to see is that companies are topping lowered expectations and that they're getting a sense of that the second half will be better than the first half, or at least seeing signs that things are moving towards stabilization. What we don't want to see are companies, missing the estimates. We have seen consensus estimates for a lot of companies actually been revised upwards through the second quarter, and it's important to realize that the pace of economic deterioration has slowed. So these companies should have a boost, and we should see estimates that are still probably too pessimistic, because despite all the increase in consensus estimates, the reality is we've moved from being, all the estimates being cut to really estimates being pretty even between being cut and raised. So now we want to see people jump over that lowered hurdle.
Right. Kevin's got a little bit of a different view, though, on this earnings season versus the next two coming up, which I also find interesting, by the way.
No, I do believe that this earnings season is important, but I really believe that next earnings season and even Q4 could potentially be even more important. It's true, everybody is anxious to see if companies can do better this quarter than Q1. With all of this green shoots talk, I think it's important to start seeing something take root, right? I think there's going to be a keener eye on looking at sales growth because you can only slash costs so much. But what's interesting is that as all of this green shoot stuff keeps on, coming forth, if in fact, we don't see the kind of good growth numbers that people are hoping to see this quarter, again, lowered expectations, I do believe that the most important thing is going to be this forward guidance. And this is why I believe the third and the fourth quarter become so critical. If these companies put out good-looking forward guidance, pressure is on to now have to deliver. If they come up with gloomy expectations, that is going to affect the here and now, but then there's even more pressure to be able to beat those reduced expectations for the future. But again, with everybody pushing the economic recovery further into the future, we were supposed to have gotten out of the recession already when they were talking about it last year. So now the economic recovery is pushed off into the second half of the year. Some people are saying the first part of 2010. So as we continue to move forward, every single quarter becomes more and more important and pressing.
So, Charles, two questions for you. Do you kind of see that as important as well, or is he just on a sugar high? And secondly, if you do kind of align with that logic as well, how does that then affect your expectations for second quarter?
Well, first, yes, he is on a sugar
Okay,
high.
that's what I thought. But
No, but I think what you're looking for, as I said before, people want to know that there's signs of stabilization, and that companies are actually, giving guidance, at least signals that we will see a recovery at some point in the second half, or at least that things are better now relative to where they were in the first quarter. And obviously, as Kevin said, if they disappoint, Katie bar the door. I mean, who knows what's going to happen? But I don't think that's going to happen. I really think it's going to be a situation where companies are going to come out and say, you know what? Things are a little bit better. We are seeing signs of stabilization. They probably will still describe the outlook as being murky and things as not being all green shoots and sunny, but that's to be accepted. That's to be expected. We're still in the midst of a recession. We're just looking for some signs that we are better now than we were 3 months ago, and I do think we'll get that.
so, Kevin, what do you expect to see then for earnings here for 2Q?
Yeah, don't get me wrong. I mean, I do think this quarter is important. Next quarter's just as important, if not more so. And I do believe that you will see more companies coming out with more positive guidance into the future. But again, nobody really knows. That's why we have surprises all the time. I do believe that people's expectations now are lower than where they were no more than 3 or 4 weeks ago, but I do believe that people are still expecting to see improvement in Q2 over Q1. But as everybody is talking about, everybody is looking for this guidance, and people are really going to be hanging their hat on what companies see down the road.
Do you have lower expectations?
Lower expectations of them not answering the question. The bar is, I agree with Kevin in that the bar has been lowered from when we were at 8,800 on the Dow. There was far too much great expectations for the quarter. Now pulling back towards 8,100 or so, I think that the market's, okay, let's see what you got. And judging by the estimates, as Charles said, they were kind of, the ratio of positive estimate revisions to negative estimate revisions in the last quarter was about even. Okay, when you take a look at the whole market, meaning that the slide of estimates has stopped. Okay, so all they have to do is just say, is the second quarter relatively the same as the first quarter? That's really all they have to do right now. The future guidance will tell us about where we go from there. Dirk Van Dyke wrote a very interesting piece where he said, listen, you have companies that end their quarter in May, and they've already reported. Now, that's just a small group of stocks, but the thing is they had very good numbers, and they were showing, and what he's saying is he believes that's a very good statement for what we're going to see now with the Russia companies over the next couple weeks. So he believes that the bar has been properly lowered, that the companies that recently reported have already shown the way that the numbers will be good. I think you see the rise in the market today. I think that people are getting ready for the numbers to be just decent. All you need is decent, and people say that things are not getting worse. You get that, the market moves higher. How much higher? Depends on how good the numbers are. But I think that 8,800, I wouldn't be surprised to see us get back up there during this earnings season. And then we need more information. Now you got to see not actual stabilization, you need to see the growth, and then we make a move higher.
Well, earnings season's kicked off Wednesday on a positive note anyway with Alcoa. So that might be a sign of good things to come. But as far as guidance is concerned, a lot of companies have been reluctant to issue guidance now going through this entire recession. What's going to make them want to get off the mark and start giving guidance back again to the market?
When there's greater visibility out there, when it's not foolish for them to stick their necks out, is what it is. And so there's still some companies that do provide guidance, but right, it's less and less. In a certain way, they shouldn't, okay, because it is murky out there. I guess you could say that if there is an increase in guidance from companies, that is a positive sign for the economy, because now they feel that they can actually measure what's going on.
Right, they can actually talk about it with some degree of certainty. Sustainability in third and fourth quarter, if we do have a good earnings season here in the second?
Well, I think we're off to a good start. We've had 21 out of 26 companies beat so far, and it's a small, unrepresentative group, but certainly a good sign. But certainly if you look at the economic forecasts, everyone's expecting the economic numbers to show growth in the second half. So, and you really look at the growth rates for the full year, they're really weighted towards the fourth quarter. It's going to be better. I think people need to realize, though, when you start getting out to the fourth quarter of this year and even the first quarter of next year, the comparisons get a lot easier. And particularly what's dragging down some of the earnings right now is things are worse for the banks now than they were a year ago. We had the huge commodities rally a year ago. Oil hit its high on July 11th. So you're going to have all that stuff kind of out of the way. So you will look at a lower hurdle in terms of year-over-year comparisons as we move forward. And that should help earnings look better on a year-over-year basis.
All right, you want the last word?
Yeah, what is interesting is that there seems to be some optimism around the banks for this quarter. So it's going to be very interesting to see how they perform. But I believe this quarter and moving forward, there's going to be a much keener eye on sales growth. And I really would like to see a lot more sales surprises as opposed to just earnings surprises.
All right, we're keeping our eye on what's going on with earnings here. We hope you keep your eye on Zacks.com, our online unit, for more interesting commentary on that, earnings, markets, and stock picks. With everyone here, I'm Terry Ruffalo.